side, there has been a couple of downgrades which have come by. So JP Morgan has downgraded Titan to a neutral now, and even Goldman Sachs has gone ahead and cut the target price as well as the estimates. So urban consumption is not doing as well as expected. But what about the mass and the rural consumption? We need the updates from the likes of Dabur, Marico, Adani Wilmar. Those green shoots of rural recovery that we were talking about, is it showing in the numbers at all?
Not as much as one was anticipating, though Dabur's commentary does say that they are seeing some bit of a rural pickup, but that we've seen coming in the last couple of quarters, though overall numbers are in line with what the street was expecting. So mid to high single digit growth in terms of revenue for Dabur. We are expecting the volume growth to be in mid single digit. Their personal care as well as the healthcare side of the business has seen a high single digit growth. International business also seeing a decent growth coming in. Margins as expected are seeing an expansion this time. Slight bit of an expansion is what one could expect. Similarly, even for Marico, high single digit growth, low single digit volume growth is what one is expecting, an expansion in terms of margins. So yes, raw material cost versus last year was lower, but now maybe in the last couple of months, we have seen some bit of an increase coming in, specifically in the last month. So that's going to be a key factor to watch out for in terms of commentary. And actually rural, whether that's actually seeing some signs of recovery is something that we're watching out for. As of now, when you're looking at it in terms of brokerages also, Morgan Stanley is maintaining their equal weight rating on Dabur. They're saying that the numbers are in line, as well as the demand environment. They are saying that slight bit of an improvement is what one is seeing. For Marico, Morgan Stanley is maintaining their equal weight rating as well. The demand trends are improving there as well. And overall, management is expecting revenue growth to improve going forward. So that's the key highlight. Overall, in line is what we could say, especially coming in from the FMCG side.
So, when the budget date is out, you actually will see outperformance coming in, especially FMCG, rural housing, and anything which has got to do with a demand push. That's how markets would move. The budget date is out. Large part of attention would be, okay, how will this budget be different from last year's budget? If last year's budget was in a sense highly focused on capital expenditure, what could be capital expenditure plus? The grain of the truth here is that the rural economy is not in a good shape. It needs push. Push will only come by spending. Spending will only come by tax cuts, which means market will start talking about tax cuts and push to rural economy. If that is the underlying moot point, that means FMCG stocks, which had this big day on 4th of June and a little bit of follow-up buying after that, they've not really seen a follow-up buying. But now that budget is out, it's raining and it's pouring, monsoons are in a, the progress, you may not like what's happening in the roads of Mumbai, but in general, the monsoon progress has been strong. Markets automatically will start moving into defensives, and at a time when the tailwind for the sector seems to be that recovery actually started and inflation is not coming back. So in the run-up to the election, there is a case for FMCG stocks minus HUL, which is expensive, and minus Titan to start outperforming. So I think the themes now which you need to focus on, if it was only roads, railways, defense, which used to be typical infrastructure, typical budget trade, this time it really could be FMCG, rural housing, and maybe some odd rural facing companies.
If you like this video, then like, share and subscribe to ET Now.